Hi everyone. Today Palomita Sharma, along with me is Sach Chhabaria, members of the private equity and mergers and acquisitions team at Nishit Desai Associates, will be discussing about the investments in the renewable energy sector as a whole. This podcast is in continuation of our previous podcast where we discussed the policy initiatives in the renewable energy sector post the budget announcement of 2024, where we've also seen what tones have been set with regards to the sector and whether this will be the right step towards the climate change goals that India has set for itself in the coming years. Now, renewable energy sector is a relatively untapped sector at this stage, where renewable energy sources as of 2024 have a combined installation capacity of 195.01 gigawatts. It is also valued at a whopping USD 403.7 billion. When viewed in conjunction with the increasing prominence of this sector world over, including its attractiveness to investors because of the certain benefits that are coming to these investors from investing in sustainable projects, the potential that we see in this sector from an investment perspective is limitless. So, delving more into this, Sach, would you like to take us through the various initiatives and policies that have been introduced in the investment sector which would be helpful for India in the long run?
Sure, Palomita. So, focusing on the recent budget announcements that were made by the government on 23rd July 2024, there are actually 4 very interesting policy changes and developments that, in my opinion, would really impact investments into this sector in India. So starting with the first one is the government has announced its intention to develop a climate finance taxonomy. So what a climate finance taxonomy is, it's actually a system which classifies which parts of the economy may be marketed as sustainable investments. So this is something which globally has been also followed by certain countries that have introduced these taxonomies, including but not limited to the USA, EU, Singapore, Canada, and South Korea. And this finally sets India on the same global standard as the rest of them, which will help facilitate global cooperation and integration into international financial systems which are focused on sustainability. It will also help ascertain if economic activities are aligned with credible science-based transition pathways, and hence this climate finance taxonomy will provide a standard to guide investors to invest in verified projects and reduce the risk of greenwashing. Considering that green finance flows in India are falling far short of the country's current needs. So right now, actually as of 2022, they've only accounted for around 3% of total FDI inflows to India. This impetus is a very needed one to attract foreign investment and to standardize these investments into India. This standardized system, not only will it help attract these foreign investments, it will also help in ensuring consistency across various sectors and projects, which will make it easier for India to also track its progress to its environmental goals, which we discussed in detail in our previous podcast. The second actually impetus that had been announced was in the interim budget, where the interim budget introduced viability gap funding to support an initial addition of about 1 gigawatt of offshore wind energy capacity. So viability gap funding is a financial tool that's used by governments to support projects that are economically justified but may not actually be financially viable due to very high initial capital costs. So because of this nature, it's often used for infrastructure and public-private partnership projects where the public benefits are actually significant but returns are not sufficient to attract private sector investment. So this move is being introduced for offshore wind energy capacity, will also make offshore wind projects financially viable. In previous budgets, the Indian government has utilized this viability gap funding, but it's been utilized only for various infrastructure projects. So this focus on viability gap funding for renewable energy projects is a more recent development and shows a shift in focus areas and priorities of the government, and it expands this application to new and emerging sectors like renewable energy. Thirdly, in this 2024 Union Budget, the Indian government increased the transfer to the Sovereign Green Fund by around 50 crores rupees, bringing the total to around rupees 170 crore. A sovereign green fund is a government-managed investment fund which has specifically been earmarked for financing projects that have positive environmental impacts. This increase again signifies the government's commitment to enhancing financial resources available for green initiative, and will also provide impetus in this sector for other investments as well. Finally, the budget also emphasizes the need for financial institutions to support green projects through enhanced credit availability. Measures include encouraging banks and financial institutions to offer preferential rates and better credit terms for projects that align with the country's environmental sustainable goal, which will lead to less capital costs and better functioning of these projects, thus making them attractive investment opportunities for investors, both domestically and abroad. So while on a whole, when combined with our previous podcast as well as what's discussed in this podcast for investments, the budget seems to be solid. Palomita, do you have any insight into whether this budget is actually going to set the tone, or is there some places where you felt the budget could have been better, or if it's fallen short somewhere?
Thank you, Sach. So, I would like to discuss the shortfalls of the budget that has been introduced in three major sets. Firstly, talking about how there has been a weak follow-through from the interim budget to the budget announced recently in July. Firstly, industry experts in the biogas sector majorly are disappointed as the budget has not met the expectations which were set by the interim budget initially. They had anticipated a dedicated financing and a research package for the sector's expansion, akin to the current scheme for green hydrogen. While the interim budget allocated more funds for green hydrogen, the latest budget did not provide additional supporting initiatives therein as well. These anticipated measures included tax holidays, concessional corporate tax rates, etc. Thirdly, there were very high expectations in the wind energy sector for new funding and capacity expansions as well. However, the budget has failed to introduce investment opportunities for the wind energy sector. The finance minister did not make any announcements to further the wind energy ecosystem in India as a whole. Then coming to the second part of it, which is the growth of renewable energy sector. We know that smart meters are crucial for promoting energy efficiency and conservation, empowering consumers to monitor their usage and make informed decisions to save energy. This as a whole, as a concept, has not been addressed by the government, where I believe that is a big shortfall for the budget as a whole, to not be addressing something which is crucial to empower the consumers in the first place, and also from the perspective of an energy efficient safety purposes. Lastly, there are also unresolved challenges in the power sector that could affect the generation, storage and transmission of renewable energy as a whole. These issues include the absence of a stable policy and regulatory framework, the abandonment of projects after their initiation, and financially troubled distribution companies. These factors may hinder the effectiveness of the measures introduced in the budget. It remains to see how well these measures will be implemented in light of these ongoing challenges.
Thank you, Palomita, and thank you all for listening and tuning in.